Joining me now on the Daily Ledger page 5 beat, President of Wilsey Asset Management, Brent Wilsey. Brent, thanks for joining us. So I wanted to start with Levi. What does a strong IPO mean for a company, for lay people like me who may not necessarily understand Wall Street as well as you?
Well, I mean, what it means is that the markets were strong and so forth, which is good. I mean, and I do have to comment a little bit on this IPO because they raised 623 million. Stock jumped about 35% to $23. I always feel they kind of missed about a couple hundred million by offering too low on that price. But a couple of things that I'd be cautious on with here is that with this company, the fashion trends can change very quickly. And they did mention 80% voting rate. I heard they kept 100% voting rate. So these are things I'm concerned about. But what this does show, Alex, it shows strength in the IPO market. This year, we do have Lyft coming on, Uber, I believe, Airbnb. So it's nice to see a strong IPO fully subscribed and do well.
And you bring up a good point because other retailers, I think it was Guess, dropped 15% today. So it's not necessarily an across-the-board type of success. But we do time and time here again about the success of this economy, whether it be wages hiking for the first time in decades, people getting back to work. The unemployment rate is one of the lowest that it's been for decades. So there are a lot of strong indicators of this economy, one of which being Wall Street. So what does it mean for Wall Street to be strong? Does it affect a lot of Americans, and is it a true indicator of a strong economy?
It really is because Wall Street has to be strong. I mean, gosh, Alex, I think without Wall Street, we would not have these big companies that we have. And much of the funding growth comes from the equity market, the bond market. So we've got a very strong Wall Street where it really helps stimulate our economy and growth. I mean, think about Apple, Google, Johnson & Johnson. I mean, these companies would not be where they are today without the funding they get from the equity and the bond market on Wall Street.
And, you know, it's been a long time since I've seen a strong economy. I mean, we've gone through a recovery mode for the better part of the past decade. I can remember several individual instances of a recession in 2003, 2008. So to me, I'm a little skeptical whenever I see a strong economy. I'm like, all right, what are we waiting for? But that, from everyone I hear, that's not necessarily the case. In fact, Federal Reserve Chairman Jerome Powell was talking about the strength of this economy. So what type of policies have really gone into play which have resulted in this flourishing economy right now?
Well, you're right, Alex. We have a very strong economy. And what we have now, we have low interest rates. And Alex, I've not heard this talked about much, but our economy is flush with cash. There's something called M1, which is your liquid cash, which includes, your checking, your savings, your on-demand deposits, traveler's checks. And it right now is $3.8 trillion. And 2010 is 1.7 trillion. Going back to 1997, it was $1 trillion. So we've got $3.8 trillion in liquid money floating around in our economy to use. And we got to remember about the tax cut helped out corporations. Now they've expanded, they've invested, they bought back shares. Easing of regulations was another thing that helped out. I mean, all this has created a strong job market that we have here. And the stock market's up, housing is strong. And the most important thing, Alex, consumers feel good when this is happening, so they're out there spending, buying, and there we have a strong economy.
Not a bad problem to have. But one thing that Federal Reserve Chairman Jerome Powell did say is that he is a little bit worried about the global economy. They've seen economic slowdowns in Europe. They've seen economic slowdowns in China. And because of that, because of the intertwined economy with the U.S., he was a little skeptical of saying that there might be a slowdown in the future. Why is the global economy not keeping up with the success of the United States?
Well, I'm sure Europe and China would love to know the answer to that question. But what I'm kind of seeing here is that, what's happened is that Germany, very strong. They were the strength before. Their economy slowed down. Italy has slowed down. We are seeing strength in Italy, not Italy, but in France and Finland and Portugal. They're growing. But I also talk about, they have Brexit. For them, that's a concern. Well, what's going to happen with this Brexit thing? Also, too, the European banks are still tight with the money, not losing as much as we are here. And also, too, I've always talked about this, Alex. They don't have a Washington, D.C., and like it or not like it, we have a central place to go to for our 50 states. The European Union, they try to be a union, but they're really not. They are separate. So that's the problem they have. With regards to China, the trade war is hurting them. Also, too, people don't realize the overall debt to GDP in China is now approaching 300%, and they've overbuilt. So they've got a very weak economy going forward. It's on like stilts where it's kind of wobbling now. So our economy, again, is flush with cash, high consumer confidence, strong labor market. Europe, by the way, their unemployment's 6.5%. Ours is 3.8. So we've done a lot of good things here. Europe and China not doing as well as we are.
Yeah, you bring up a really good point, too. You ask any investor, one thing they don't necessarily like is uncertainty in the future. So that's something that maybe Europe is currently facing right now, especially with Brexit on the line. But Brent, thank you for joining us as always.
Want to see more videos like this? Click on the link below and subscribe to One American News on YouTube. And call your cable provider and kindly demand that One American News is added to your lineup. Call and subscribe today.